India has seen a spike in retail investors in recent years with the opening of a record number of demat accounts. Everyone is hunting stocks that can double and triple in some time so that they can become free from worries of their finances of 9-to-5 jobs. How many multibaggers have you found till now? What if you can build a portfolio of 1 crore with consistent multibagger stocks? In this video, we go down the road of baggering multibaggers. A reasonably small amount for financial independence in the future is about 1 crore at least. We want to educate viewers on how to reach that golden amount by finding multibaggers and keep multiplying your portfolio. The task is not easy, neither is there a panacea to unlocking new stock picks time after time. Nevertheless, we can chart a few traits of what multibaggers look like and use those parameters to secure our future searches. So without any further delays, you go hit the like button and we get on with it. Chapter 1. What are multibaggers? Multibaggers are simply the stocks whose returns you don't measure in percentage. Instead, you go for the multiples of how much you invested. You gave the company a bag of money, and now your stake in the company has grown to 2, 4 or 10 bags, and hence the name multibagger. Multibagger stocks are quintessential to growing your portfolio at the required CAGR returns above the market benchmark. The Sensex Nifty indices have earned some 13 to 14% CAGR in the last 4 to 5 years. Now, that means that most of the large cap stocks in or out of the index would not have been far off that number. A portfolio of some stocks, however much created to mimic a balance of an index, will have an average return also close to the index. This means that beating the market, meaning the indices, is hard. This does not mean that a 14 to 15% return is a bad number. It is an excellent number by all means. But what you need to get to a 1 crore in some 30 years or less is a multibagger portfolio. Your portfolio has to have many multibaggers through the years to get a 1 crore net worth. We have calculated for you that for 1 crore, you just need a 1000 rupee a month SIP with a 10% annual top-up performing 15% CAGR for 28 years. So that's achievable in the long term. Here, the only catch is that a 15% return, as we said above, will already have some multi-baggers. To go even shorter, say 20 to 25 years, you need many more of these multipliers and compounders. To know more about what makes a stock a future multi-bagger, we need to explore some past examples and study them. If you are liking this video so far, drop a like and press the subscribe button for more such content. Chapter 2. Multi-baggers of the past and their traits. There are around 146 stocks in the BSE 500 index that have grown to 5 baggers or more in the last decade. But such a list includes more of the king of good times than consistent performers. Here, multi-baggers like Tanla platforms and a lot of Adani Group shares make a mark. However, on a deeper analysis of these companies, it is difficult to find some inherent advantages that make them price-worthy. For example, Tanla Platforms is a 20x or a 20 bagger right now. This is after the stock has shed about 50% from its all-time high. For any retail investor, 20 bagging is delightful. But can they sustain their faith in the position with 50% drops? Tricky. What we need are more consistent multibaggers that can sustain continual growth and stock returns for 20 to 25 years. Why do you ask? Because switching positions is a game of time. You will need to have keen eyes to point to a rational time of entry and exit. Also, you need to be ready with a second potential multiplier when you exit one. Ask any major investor in the market, and they will scold you on how hard finding such potential is. So, what you need are market stalwarts with some 5 to 10 years of performance that can sustain such performance in the visible time ahead. To study this, we will get some names of the past. The first name that comes to mind is HDFC Bank. The stock is given 29,190% returns, a 291 bagger in 21 years. What is worth noticing is its price chart. It seldom falls a significant amount in all these years. In fact, turn on a good chart website and turn on the log function. This will show the growth path on a logarithmic scale to reflect all near-term ups and downs from the beginning. Interestingly, the chart for HDFC Bank shows an almost linear rise. The reasons behind this rise are very ingrained in the fundamental. The first is a moat analysis. Remember how castles have moats around them like a desert hilly cliffs or swamps full of crocodiles? The moat around the castle protects it from attackers. Similarly, the moat around a business protects it from competitors. HDFC had the moat of providing excellent banking service in underserved areas. By a layman's estimation, in the late 90s, all of India was underserved in terms of banking, and private banks had much better service and efficiency than public sector banks to grow. This was HDFC's competitive second is efficient and candor-full management moat. This kept HDFC Bank's growth high, asset quality excellent, and corporate governance as excellent as top Forbes listers. This is the material that compounders are made of, and we need to find more of these. Its housing finance parent HDFC has a similar record. So does Ambani-led Reliance Industries, a 48-bagger in 20 years. So from this, compare and contrast, a comment: which type of multibaggers do you prefer, a Tanla or an HDFC Bank? Chapter 3: How to identify new multibaggers and some examples. What is ahead in terms of technology over the? Let's get some evaluations for what can currently perform in recent years into the future that we need. The current years are of tech-enabled businesses. Previous requirement of a moat, management and business outlook is what will work for us. Because we need to build a 1 crore portfolio from 2022, not 1992. So more recent and faster multibaggers are tech-savvy but old-school stalwarts in consistency. Bajaj Finance and Bajaj Finserv are commonly. The first thing that comes to mind in this context is the Bajaj twins, referred to as Bajaj twins. These have sported near 50% CAGR averaging both. Remember the rule of 72. Calculate how much time it would take to double your money at 50% CAGR. It is less than 2 years. In fact, the rule of 72 itself collapses near that rate to show the accurate time needed. The Bajaj twins run a financial services business on an NBFC or non-banking financial company-based license. They provide cards and similar personal lending. Now, the advantage of this business is that it can charge a very high rate of profit. The downside is that such lending is subprime and can suffer a lot of defaults since there is no collateral. Bajaj twins have used a data-enabled platform to expand and sell at a stupendous rate without suffering on asset quality. They have stood the test of time during the poor years of the pandemic. So, we need stocks like these to get us to 1 crore quick. So what shares can we invest in? The trades have already been decoded, so you can find these yourselves. But the simple trick is to just use these names. HDFC Bank is merging with HDFC to achieve synergies. Reliance Industries has an oil to retail to digital conglomerate business with a future in 5G and green energy. The Bajaj twins are still young and kicking as the card and personal lending business in India has not achieved penetration in developed countries. So these multibaggers are themselves multibaggers of the future. We're not going to recommend any stocks, but you can definitely consider these as candidates. Their traits and a basic screening of the Indian stock universe can lead you to more of these. You only need so many to get there. A good portfolio only needs 12 to 20 stocks. Chapter 4: Do's and Don'ts. Create a 1 crore portfolio from multibaggers. Now let's come to behavioral science. We have to be serious enough to look at the emotional intelligence side of investing. The stocks we saw are the winners. You know they are winners and you want to project their future based on the past. This includes hindsight and recency bias, meaning what has happened in the past will happen ditto in the future. This is a gross oversimplification. You will need to keep looking at news and annual reports to keep track of your investment. So that's the first lesson. Be aware of your biases and keep your eyes on the price. Don't just go and find multibagger charts and invest. Rather, study why something became a multibagger and find something for the future. Another do is to look at the future. As we showed with the case of the Bajaj twins and the use of technology, be sure that your candidate has a future. Currently, sectors like electric mobility, green energy, and defense technologies are looking at a bright and delightful future. Sure, there is a risk involved but a better chance of reward. Ignoring the risk is a don't if you missed it. The next lesson is faith. You will need confidence and belief in your research to hold. Some stocks take time to perform. Value investors will often face this challenge that the business is performing, but the market is not taking cognizance of the growth. This can go to some irrational times. We all want continual price rise of HDFC Bank but we may get a Reliance which remained stagnant from 2012 to 2017. So don't sell before it starts performing. These are basic do's and don'ts to give you your due multibaggers. Recently, public sector banks have started turning multibaggers after a few years of underperformance on asset quality worries. Why? Because government and banks' actions have started turning green. The asset quality is improving, which releases funds from provisions and reflects in profits. In your investment journey ahead, you will need to keep your eyes and ears open for such stories. The fundamental analysis can give you long-term 10, 20 or even 100 bagger stocks. The analysis will need a look at numbers, corporate governance, competitive moat and future outlook like tech use. That's all from our side. Don't forget to like, share and subscribe to the channel for more such content. Remember to type your comment below, Tanla or HDFC Bank. Which do you like better and why? To learn more about becoming a crorepati, go to the linked video. Make 1 crore by the principles of the psychology of money.